FutureTrend channel is glad to welcome all of our subscribers. Today is 18th of March 2019. We are ready to present our point of view, our vision of how to trade major currencies during the course of this week. We told a lot of times during our previous reports that together with the economic slowdown that we have witnessed all around the world, sooner or later the United States would follow the suit. And at the moment, last portion of economic data came from the United States confirmed such kind of expectations. As you know, on Friday, both of economic indicators like industrial production or manufacturing activity in the New York region, both of these indicators came in below expectations. And together with other segments of the economy of the United States, which points to an overall slowdown, cooling of expectations, that points that during next Fed's meeting, probably the Fed's members will take more dovish stance, and that of course should not bode well for the United States interest rate expectations for the yield of the United States government papers, and altogether for the United States currency itself. So let's see a kind of short view on overall situation, for example around the euro-dollar, which is looking a little bit better, let's say so, than a week ago. At the moment we are ready probably to test sooner or later, probably before this Wednesday, when the Fed meeting will take place. Next level to watch is a so-called downtrend line located around 113.75. There is another resistance barrier, the resistance barrier 114. Every time we are above that level, the euro-dollar finds kind of stronger offers. And at the moment, probably more important level to watch to the upside is the location of moving average 200 daily line that lies around 114.83 at the moment. Only a clear closing above that level could point to another kind of bullish incentive from the side of the euro-dollar currency. As regarding some other majors, for example, dollar-yen is also under the pressure this morning after the highs witnessed during previous trading session around 111.90. Once again, the level of 112, let's say 119.90, 112.10. Overall, we are seeing a kind of stronger resistance level around 112.20. That's why we continue to keep our short trade position in the currency at 111.70 with a stop above 112.30. And of course the level of 110, it's a kind of stronger kind of support at the moment. There is not only kind of psychologically important support barrier, also here you can find an kind of immediate kind of short-term uptrend in the currency that was drawn from the lows of 10th January. Sterling dollar is supported at the moment because of the market's reaction to a kind of Brexit delay, but once again, as we told a lot of times during previous trading week, it's hard to say that there is only kind of positive moments for the cable right now, for example for other sterling crosses like euro-dollar. That's why we suggest that at the moment probably this currency finds or already found a kind of interim bottom around 84.70, and sooner or later will go a little bit higher, at least to its current downtrend line located at 87.10. That's why, as regarding the euro sterling, we still keep our long small at 85.45 with the stop below 84.50, so below the last week's lows in the currency, and we continue to target the level of 0.87. The same applies, by the way, for the sterling, for the cable, where we still keep our short position. We are ready to increase the position at 133.30, and we put a stop above this year's highs that we registered during previous trading week around 13th of March at 133.80. Finally, a short view on dollar Swiss. Dollar Swiss continue to find a kind of stronger support barrier against the parity level, but once again the pair continue to be jammed, let's say, between the highs of this year as well as the highs of last year, that's located around 101.30, and so-called uptrend line in the currency, the uptrend line of 2018-2019. At the moment, this uptrend line located at 0.9825. There is another support area in the form of moving average 200 daily line. At the moment, it's located around so-called psychological support level of 0.99. Also here you can find moving average 200 daily line at the moment. Let's see, the moment at 99.18. Overall, the level of 99.20 continue to be kind of big support for the dollar Swiss right now. As regarding Russian ruble crosses that during the course of a previous trading session finally broke to the downside from its big range. Let's say, for example, the Russian ruble is closed around 64.80. That's the lows of 2019, as well as, let's see, the lows of even probably the the lows of previous kind of channel support. The range between 65 and roughly say 60 and 70 and a half. So in case of closing below the so-called uptrend line located at 64.50, probably the pair could see some kind of other weakness. As regarding euro ruble, also here kind of important penetration. We are below the level of 74 at the moment at 73.38. We had to close our long average at 74.25 at the level of 73.75 with a kind of small stop loss, and now prefer to stand aside. Let's see how the situation will evolve further during the course of this trading week. But once again, the Russian ruble at the moment is looking especially strong comparing to some other currencies. Thank you. Thank to all of you, to all of your suggestions and commentary. Thank you. Subscribe for our channel and take care.